Tuesday, September 13th, 2016. Monaco 64 here, home of alternative economics and contrarian views. It's 6 p.m. London time, so 1 p.m. New York time. I've been watching the markets most of the day, and right now the Dow is right on the near the lows of the day. We're at 18,041. We're down 275 points. S&P down 37 points at 2121. We're down 1.72%. So that's down quite a bit. Have to say gold and silver were doing quite steady until a few minutes ago. Gold was trading around 1324. It must, trading there most of the afternoon here in London. But now with the further drop in the Dow, they've come in and knocked it down to 1321, which is down 7 on the day. Silver is near the lows of the day at 1888, down 26 cents. I still think that precious metals holders have nothing to worry about. The thing to look at now as well, in my opinion, is the bond markets. On Friday, I updated my viewers about the markets, how the Dow dropped almost 400 points, but also bond yields had gone up, which meant bond prices went up, especially U.S. Treasuries. And yesterday, bonds didn't do much, and the stock market rebounded about 240 points. The Dow, now we're down 270, so we've given up all the gains plus a little more. But the other interesting thing that's happening now, and I've just noticed in the last couple of hours, the bond markets have really moved lower, especially, the 30-year Treasury and the 30-year long bond Treasury. The yield now in the 10-year is at almost 175. We were at 167 on Friday, so that's up another 8 basis points, which, believe me, is quite significant. I worked in the bond markets for over 20 years. The 30-year bond yield is at almost 250 right now. We're at 248. From Friday, it's up 9 basis points. And just to give you an example here, an idea, the 10-year note futures, they're down half a point, which is quite significant, especially when the stock market is down so much, down 270 points. Treasury should be going up, not down. I've, seen stories on Zero Hedge today. Apparently, JP Morgan, they're trying to explain why treasuries are dumping as well as equities. And they're saying it's the fault of the Bank of Japan because there's a story that they might twist out of their long-term JGB positions, like the 10-year JGB, because they bought too many of those, and the yield had gone negative too far, that they might sell 10-year JGBs and buy the shorter end. But I think that's hogwash. I don't think, people always blame other countries or other. It's crazy because if you look at the JGBs in the last month, for example, the 10-year JGB has gone up 9 basis points in the last month. So nothing huge, from minus 11 basis points to minus 2 as of this morning. Treasuries, on the other hand, the 10-year U.S. Treasury in the last month has gone up 21 basis points. So is it really the JGB's fault? I don't think so. I think there's something more here. I'm not trying to be alarmist or anything, but I just felt it's important to update you here. We're now testing the 18,000 level in the Dow. S&P is underperforming. It's down 1.67%, while the Dow is down 1.5%. And the fact that treasuries are down quite a bit, especially, 10 and 30-year treasuries. That's very significant because, as I spoke in my video last week, when the stock market dropped a lot from last year in December to beginning of February this year, 10-year yields dropped from like 2.2% to around 1.6, which meant that Treasury prices went up because people were, getting out of the stock market and buying Treasuries as a safe haven play. And that's not happening anymore. And I'll also put up a card to a video I made, I think it was in July, about whether the 35-year bond bull market had, topped. And back then in July, the 10-year yield got down to around 134. So we're now up 40 basis points from them. Yeah, there's a lot of people who think this is temporary and will go back down and maybe even touch 1% on the 10-year. I have a friend who still works in the city. He's worked in finance for 30 years, I'd say, maybe even more. And he's still convinced that U.S. Treasury yields are going to go down to, the 10-year to around 90 basis points or 1%. He believes we're in a Japan kind of environment, that it's going to keep going on forever, like this, with no shocks or anything. And he might be right, but he might be wrong as well. So there you go. So as I finish the video here, around 6:15 London time and PM, Dow is down 265, so down 1.4%. S&P down 35 at 21.23. Gold now 13.22, down about $6. Not concerned about gold. Mining shares are getting hit, but I wouldn't worry either, personally. What else? The currencies, the pound is making the headlines today. It's down 1%, so below 132 against the dollar. All the other currencies are fairly steady, I would say. Oh, the other thing I wanted to talk about is how there's a couple of stories out. I was listening to Jay Snip 4, who I like listening to, and he was talking about the story from Wells Fargo Bank in the States. Apparently since 2011 at least, they've been creating false bank accounts, like about 1.5 million false bank accounts and about 600,000 fake, not fake, but they've been creating bank accounts and credit cards for clients without the clients knowing, taking all their information, and like forging PIN numbers and emails, and then charging them fees for opening those accounts or fees for late payments. So yeah, they created 2 million accounts, without the people who had accounts there knowing, and then charging them for late fees. And this has been only come out recently, but apparently it had been investigated over the last few years. And the woman who'd been running the department at Wells Fargo, she just left apparently for personal reasons in July, and she was paid $125 million for her good job, and Wells Fargo was fined, I think, $185 million. But I'm sure they made a lot more. So that's the reason why I'm talking about that, is that, the banks are still at it, committing fraud, and no one's been, gone to jail. Apparently Wells Fargo fired 5,000 people over the last few years because of this affair. But no one went to jail, and the person in charge actually got $125 million for doing that. So as Jay Snip 4, it looks like crime pays. So that's why I'm saying, precious metals holder, I wouldn't be worried. Would you really want to have all the wealth you've accumulated or the savings you've had? Would you want all of that in a bank? I think it's more than prudent to have some of it in precious metals. So that's it for now. I'll keep an eye on the markets. So my take, right now, we've got about just over 2 hours and 45 minutes to the close. My take is that things don't look very good. The stock market under pressure, and bond yields, more importantly, Treasury yields spiking higher. And that's, and I wouldn't listen too much to people like JP Morgan, Goldman Sachs saying it's because, it's a Bank of Japan's fault. I don't buy that. So if you like my videos, please like them, share, and subscribe to my channel. And take care. Bye.